This video is about women and heels. No, I haven't suddenly turned this channel's focus to women's fashion. H.E.E.L.S stands for Healing, Empowerment, Elevation, Love, Support. H.E.E.L.S. It was a nonprofit working in Washington, D.C.'s Congress Heights neighborhood to reduce gun violence. In fiscal years 2022 and 23, it received $814,000 in support through the D.C. Attorney General's Cure the Streets program. And then, according to a lawsuit by D.C. Attorney General Brian Schwalb in June 2025, founder and former CEO H.E.E.L.S. transferred $57,302 of grant funds into her personal checking account. Oops. Hey, welcome back to the Nonprofit CFO. On this channel, we pick a topic in nonprofit finance, highlight it with a real-life story, and see what we can learn from it. So let's jump in. DC Attorney General Schwab said, and quoting directly here, "Women in H.E.E.L.S. and H.E.E.L.S. misused grant funds intended to keep district residents safe, taking advantage of taxpayers and undermining gun violence prevention efforts in Congress Heights." Let me walk you through what the AG's complaint actually says, because the details matter. Women in H.E.E.L.S. received a grant through the Cure the Streets program in March 2022, and according to the DC Attorney General's office, financial irregularities began showing up right away, less than a year into the grant. The office of the AG suspended the grant, then terminated it, then issued subpoenas, then filed a court order requiring the organization to produce financial records. That escalated quickly. What they found, or rather what they couldn't find, was documentation. For $153,500 in claimed grant spending, there were no records. Nothing showing what the money was used for. Nothing connecting the spending to the grant's authorized purposes. That is the detail that I want to spend some time on. Not even as much as the $57,000 that was allegedly wired to a personal bank account that maybe you saw in the thumbnail and caused you to click on this video. Clickbait. But the $153,500 for which there was no documentation. That's a problem. When your grant agreement says the money must be used for a specific purpose and you cannot produce records showing that it was used for that purpose, the law treats it as if you misspent the funds, whether you did or not. I have never had a client transfer grant money to their personal bank account, of that I am reasonably sure. But what I have absolutely had clients do is be in situations where they didn't keep their records in real time, and come grant report time, they're having to piece together grant spends from bank statements and old faded receipts. And that is an uncomfortable situation to be in. Good documentation is not optional. It is your defense. It is your evidence that what you were supposed to spend is what you spent. By the way, H.E.E.L.S. has responded publicly to this statement, defending herself. So I want to include that here. She said, "The allegations are misleading. With all the challenges surrounding violence interruption and public safety, I've become an easy target. I stand by my work and my integrity, and I look forward to having my day in court to resolve this matter and clear my name. The case is ongoing, and these are allegations. What is not in dispute is that Women in H.E.E.L.S. lost its tax-exempt status and its DC nonprofit status, and that it really angered funders. What is not in dispute is that $153,500 in grant funds were spent without documentation, and even without malfeasance. That's a problem." So obviously this is how not to report and track grants. To just, well, not. And they lost their federal nonprofit status, their DC tax-exempt status, their mines, all of it. But what about the rest of us who want to track and report these grants well? Well, that's why we're here. Now, as you may be aware, most grant compliance failures are nowhere near as dramatic as Women in H.E.E.L.S. They're not typically about fraud or theft, which may very well be the case here. They're usually about poor record keeping, about missed grant deadlines, incomplete documentation. But I bring up this spectacular failure not just because I love a train wreck, but because it illustrates something else perfectly. The systems or documentation failures that allow ordinary mistakes to go unnoticed are the same ones that allow deliberate misconduct to go unnoticed. And usually the systems designed to catch one will catch the other. Good grant tracking protects your organization from honest mistakes, and it protects your organization from bad actors. Today, we'll build those systems. The first rule of grant compliance is simple, and because it is important, I'm going to say it in this voice. Read your grant agreement before you spend a single dollar. I mean that literally. The grant agreement is a contract. It tells you what you can spend it on, what you can't spend it on, the grant period, the start, the end dates, the report dates, who to send the reports to. Basically all of the things. It has all of the things in it. Read it. In addition to reading the grant award letter, I recommend creating a standardized file for every grant that you receive, physical or digital, doesn't matter, whatever you'll keep. This should include things like the original grant award letter, all correspondence with the vendor, every financial report that you file, and potentially every receipt or invoice that you spend against that grant, if you don't have a different digital way of filing already. For most grants, you will at some point need to produce invoices or receipts, so a digitized receipt process is what I'm talking about here. And if you don't already have one in place, then this is a good reason to start to work toward that. Which leads us nicely into the commercial. Grant tracking is one of the areas where having a strong accountant makes the biggest difference. The bookkeepers with Tucker Business Services know this and are here to help set up your grant management processes and track those invoices and expenses so that when the report time comes, your documentation is already there. We are here to help you succeed. And our link is in the description. In your accounting software, every grant needs its own project code, class, or fund, depending on how your system works. And you want to record all of your expenses coded to that grant, to that same project code, class, whatever it is, at the time that you incur the expense, not months later when you're going to write the report. When it's time to write your financial report, you can then go into your software and pull a report in 30 seconds, showing all revenues and all expenses that have been charged to that grant. And what's great about this is it's not just the funder at the end of the cycle that wants to see this, but this report will also help you manage that grant mid-cycle to show you what you've brought in and what you've spent and what's left to spend. If that process takes you days instead of minutes, well, you have a systems problem. And a systems problem is a compliance risk. But also, if you don't know how much money you've spent on the project already, then you won't know how much you have left to spend. One of the worst things is to get to the end of a grant cycle and then realize you haven't spent all the money and have to give it back. But the good news is that this is fixable. To help you stay on track, maintain a grants calendar. This calendar should have all the start dates, the end dates, all the report dates for the contract. And what's great about calendaring systems these days is you can maintain a separate calendar that's only for your grants, or even if you deal with a lot of grants, multiple calendars. What's nice about that is you can hide the rest of your activity and only look at your grant calendars. It's very helpful and will help you potentially not miss deadlines. When it comes to reporting, there are usually two types. Narrative, where you say what you did, who you served, whether you achieved the outcomes you set out to achieve. And the second is financial, what you spent, how you spent it, and how that compared to the original budget. Make sure your reports tell the same story, by the way. That your narrative, if your narrative says you had 12 workshops and you served 400 people and cost about $10,000, make sure your financials are telling the same story. So even if you're getting those reports from two different people, before you send them off, make sure you take a look that they're telling the same story. Otherwise, your program officer will notice. Now, as you're reviewing your financial reports, and if you start to notice that you might be underspending in certain categories, make sure that you reach out, communicate proactively with the funder. Most funders, their program officers, hear what you're saying and will try to work with you. But very few will be inclined if it's the day that a report is due and you're reaching out about that, or especially if it's late. Set those calendar reminders. 2 months out, 1 month out, 2 weeks out. This is not usually too complicated. What it is disciplined. And our systems can help discipline. Good grant tracking doesn't just protect you from the Attorney General, though it does. It protects your programs. It shows that your work is measurable, that your impact is real, and that funders can trust you with their money. So collect that documentation, not only because somebody is watching, they are watching, but because your work, your program, deserves that protection. Thanks for sticking around to the end of the video. If this has been helpful, please share it with another nonprofit leader. And leave me a comment. Let me know what you'd like to see, other topics, or ways that I could be of more service. I'm here to help. I'm Evan. This is the Nonprofit CFO. We'll see you in the next one.